Welcome back to Shop Talk. I'm Ria Tanwatco Trillo. Time now to talk about foreign exchange trading. And for that, we're joined by Mark Saw. He's the chairman of Business Maker Academy. Mark is also the founder of Forex Club Asia. Hi, Mark. Thanks for coming on the show.
Thanks for having me.
Okay, very briefly, what is the definition of forex trading?
Well, very simply, forex trading is buying and selling of currencies, such as the euro, the yen, the dollar, and profiting from the changes of the currency prices.
Is it more risky than other investments? Like, I was talking about trading in stocks earlier.
Yes, definitely. It's not for anybody. It's really more for the aggressive traders, because the volatility when you trade currencies is a lot more than trading stocks.
Right. So it's people, for investors who are willing to take the risk.
Willing to take the risk. So definitely.
Right.
It's really more for people who have excess cash, excess liquidity, and want to make more out of that.
What are the factors that move currencies usually?
Okay. Well, when you trade currencies like any investment, you have to take consideration of three things. The three things would be, number one would be technical analysis, or how the movement of the price was before, studying of charts. The second thing is fundamental analysis, or what's happening in the economies of the world. And the third, and probably most important of all, is risk appetite. When I say risk appetite, it's, are people greedy for more money, or are they fearful and they're pulling out their money from investments? Right. So those are the three things that move the currency markets. Okay,
so looking at today's world, what would you say, if you're allowed to give away this information?
No, sure.
What are the good, currencies to invest in?
Right now, the dollar is not in a very good shape. Although past 2 weeks it's been rising a little bit, it's not going to rise for long. Why? Because the US dollar, as you said, they're all borrowed out. But more importantly, the US dollar has no intention of raising the value of its currency right now, because their economy is still in recovery mode. So the currency that I'm buying would be the higher risk in currencies. And these are Australian dollar, New Zealand dollar, and Canadian dollar. I would not want to hold my money in Japanese yen or in US dollars, for that matter. So to answer your question, yeah, that's my answer.
That's saying you like the
Australian dollar,
the New Zealand dollar,
and Canadian dollar.
And Canadian dollar. All right.